Okay, so looking at the upcoming Tuesday session, we just kicked off here in Asia. And, Kiwi Yen has, shown signs of strength again. I think we are eventually going to that 73 ish level, so I'm still in it. Full disclosure, no interest in trying to short this market now. For those of you who are watching the free video, basically, right above 71 was an entry. We got a daily close above a 200-day EMA. That's also an entry signal. So as long as we can stay above 70.30, you have to think that it's still a viable long position. And again, I think 72.90 or so is where we'll be taking profit. The stop loss would be basically 70.30, target 72.90 or so. Looking at the New Zealand US dollar pair, I think this, now I wouldn't necessarily take both trades, but this is a reasonable one. If we can break above 65.10, then you have to think we go higher. That should send the market looking towards 66 with a stop loss of 64.75. That's trade one. Or trade two on a pullback to 64.50. I think you can risk 30 pips. So it's 64.20. And at that point, you're trying to aim for 66 as well. So either we're going to bounce there or we're going to take off. My thought process. Interestingly enough, the US dollar has found a bit of support here at a very crucial 14.5 level against the South African Rand. I think your stop loss goes 14.48. Your target 14.75, I think is a doable trade if you choose to trade this. Now, I wouldn't put a ton of money into this, but it's certainly viable. Now, if you do get broken down and we reach 45, that opens up a trade in and of itself to reach down towards 14. Excuse the sloppy writing here. 1405. So I would enter at 1445 and short to 1405. Stop loss above at 51. So you have one or the other. Right now, it looks like it's ready to bounce. But if it turns out to be wrong, then you just short it. You should be able to turn right back around at that point in time and get involved. There are a couple of major pairs that could be interesting. Dollar yen, I'm going to be paying attention to. I'm probably going to give this 24 hours, though. I had somebody ask me about that. Aussie dollar. Now, this is one that could be interesting because we got some decent Chinese economic data. 68.33 is an area that I swear I've mentioned a couple times. So above there, I'd be a buyer. Stop loss 67.90. Target 69. Otherwise, I would fully anticipate some type of rollover. It's a little dicey, but and I think it's a little early to call it here, but it certainly looks as if we're trying to make a higher low. And this is perhaps the most obvious trade in the world. Above 130, you've got to aim for at least 300 pips. And adding more credence to that is this inverted head and shoulders, which is just about 300 pips in and of itself. So that's kind of a standing order. Same thing over here, British pound, Japanese yen. If we can break 142, this thing's going to take off another 300 pips pretty quickly. Okay, so as far as commodities are concerned, I'm only going to be looking at gold at this point. 1450, the top of this ascending triangle, continues to hold. That's good news for Mo. There's a little bit of a hammer here. As long as we can stay above 1450, I like the idea of buying on the dips. However, I think the next trade sets up at 1480. You have to be a buyer aiming for 1500. I'd have a stop loss at that point at 1469. I'd give it about $11. From a kind of a buy on the pullback point of view, I like 1460 on a dip. Stop loss 1450. I'd target 80. So that's one of your two trades here in gold. That's how I see things right now. I'll keep you up to date in the room, obviously. I have to admit that some of the riskier currencies, the New Zealand dollar, held up pretty good actually during the day. So that's interesting. So we'll see how this plays out, but that's what I've got for you now.